Welcome aboard the GMS Podcast, your weekly compass through the shifting tides of global ship recycling. I'm Henning.
And I'm Ingrid. Thanks for joining us for the Week 39 edition. This week's theme is disconnect, because global markets are sending mixed signals that are leaving everyone scratching their heads.
It really has been a roller coaster. Dry bulk shipping managed a net 2.5% gain, led by Capes climbing about 5.5%, even as the Baltic Dry Index dipped late in the week. Oil headed the other way, with WTI crude easing 1% to around $65 a barrel, pressured by Iraq's Kurdistan region restarting exports after 2.5 years. Meanwhile, key recycling currencies, Bangladesh's taka, India's rupee, and Turkey's lira, all weakened, while local steel plate prices mostly flatlined except for India, where they fell sharply.
Starting with Bangladesh, the market remains the quietest in the subcontinent. Recycled steel just isn't moving, new government stimuli are missing, and the taka slid to about 122.04 per US dollar. Buyers still want bigger LDT tonnage, but most of those vessels are steering toward India and Pakistan instead. A small positive is that 18 yards are now Hong Kong Convention compliant, with a few more expected next month, but activity stays painfully slow.
India had its own set of troubles. Alang faced another bruising week as the rupee weakened to 88.62, briefly flirting with 89, while steel plate prices dropped $15 to about $409 per ton. Although a few vessels like the Niigata traders sold at relatively high levels, fundamentals don't support those prices. With ongoing U.S. tariffs and sanctions clouding sentiment, some tonnage is already being diverted to Pakistan.
And Pakistan is where the real action was. Several bulkers changed hands, including the Rising Harrier at $445 per LDT and the Puteri Kirana at $390 per LDT on an as-is basis from Surabaya. Strong local steel prices and a rupee firming to 282.50 underline Gadani's momentum, even as yards raced to catch up with Hong Kong Convention standards.
Turkey, meanwhile, stayed quiet. The lira slipped to 41.58, and local steel prices continue to edge down bit by bit, leaving little to report beyond steady, subdued sentiment.
So that's Week 39, a market in disconnect. Stronger dry bulk freight, softer oil, weaker currencies, and mixed regional fortunes.
For full details, charts, and port positions, download the complete GMS Weekly on the GMS mobile app or GMS website.
And don't forget to follow this podcast on Spotify, Apple Podcasts, Amazon Music, or YouTube Music.
Thanks for listening. We'll be back next week with more market intelligence from GMS, the world's largest cash buyer of ships for recycling.